Karan Taurani, EVP at Elara Capital, joining us this morning. Karan, thanks so much for taking the time, and good morning to you. Initial implications, and we've kind of highlighted what the note says, but let's talk about the nitty-gritties of it. Were you actually seeing any impact of a 10-minute delivery, or not really?
Hi, morning. So I think if you look at the lead time of the quick commerce business, the gig workers are currently doing anywhere in the range of 2.5 to 3 orders on a per hour basis, which effectively means that the average lead time on a pan-India basis across platforms is around 20 odd minutes, right? Now, when we started quick commerce as a business proposition in the COVID times, it was more of a half an hour delivery wherein people wanted things on a convenience basis. But the entire mindset shifted to a 10-minute delivery from a branding standpoint, wherein the consumers became more impatient, and the pitch was basically to get people habituated to this and to create this category. Thankfully, two major things here that work in the platform favor. One is, of course, there is no penalty in case the product is not delivered within 10 minutes, like you've seen the case of Domino's Pizza, right? And second, I think it's been almost 3 to 4 years now. The category is well penetrated, well created, and quick commerce in India is very much here to stay because clearly e-commerce is coming into this business. There are other new competitors which are coming into the business. Conglomerate like Jio is coming into the business. You have the likes of DMart, which are also struggling to a certain extent in terms of the quick commerce hit. So very clearly, quick commerce as a business model is here to stay because of the opportunity and because of consumer acceptance. These kind of things will not have any negative impact on the business fundamentally.
You know, I'm wondering if it has any positive impact on traditional retailers. And we were having that conversation earlier, Karan, about how maybe DMart needs to be relooked at. If there is this competitive intensity decreasing, is it a positive for them? You have any thoughts on that?
See, as far as DMart is concerned, the entire proposition for DMart from a consumer standpoint is value. And they would offer the lowest price to the consumer across any modern trade player or any of the online channel. What has happened in the recent past is that the quick commerce business firstly has seen acceptance in some of the markets wherein consumers have become impulse and they want to order products on a convenience basis. Second thing is that there has been fragmentation within the quick commerce business because everyone's realizing now that quick commerce is a very large TAM. It can actually have a 40-50% of e-commerce TAM going ahead. It's a significant market, right? And because of this increased competitive intensity, there are price wars. So to a certain extent, what's happening to DMart is that very clearly the price proposition that DMart had in terms of the value proposition, that is now being challenged by the quick commerce players because they're offering similar or lower prices for certain categories. So DMart will either have to invest in terms of building the digital infrastructure and in terms of building DMart ready as a proposition, or they will have to kind of compromise on their margins by reducing the prices of the products further as compared to the QCOM discounts or compromise on growth. But I think investing to digital infrastructure is a big challenge. It takes a lot of time to create category, to create warehouses, to actually have a dark store, to actually have customer data. Now, these platform companies are digital first companies. They have got massive amount of customer data, which they can use basis algorithms, basis consumer behavior. And it's all about micro assortments, deep dive in terms of markets, knowing your markets very well, which DMart may not have. So very clearly, DMart definitely is not impossible. DMart can scale up in the DMart ready digital business proposition, but it's going to take a long time for them to reach that kind of level and scale.
Okay. Can I interpret that, Karan, to say that the challenges that might be posed, and I'm looking beyond DMart, you mentioned a few other players as well. There are even players that I have witnessed in my neighborhood, maybe you've studied this in more detail, where you place an order before 12 midnight and it's delivered in the morning between 5 and 7 o'clock. So people are moving towards those kind of models as well. I'm just wondering whether the competition that is posed from these extraneous players, not the platform players necessarily, is enough of a worry for these players, and which would be your pick between the two main players?
See, now the model which you are talking about is a slotted delivery model. Now, this model has been there since more than 5 years, much before even the QCOM was there, right? But that model has not taken off. If you look at the likes of Amazon Fresh, they were one of the first players to start that model actually, and that actually offered groceries. Same with the case of Big Basket as well. They offered slotted delivery during the pandemic times. But that model did not take off. What took off as an innovative approach was the quick commerce model, wherein consumers wanted delivery within 10 minutes, right? Now, what is also happening within QCom is that QCom started as a grocery proposition, FMCG proposition, when people would just want to call food on impulse basis. But the consumer behavior is changing so drastically here that this is not only food. This is about small white goods. This is about accessories, mobile accessories. It's about some kind of selective apparel. It's about beauty, personal care, and stationery and toys and other things put together. So quick commerce is no more an FMCG grocery offering. So definitely lead times will increase from maybe 10 minutes to even 20, 25 minutes going ahead, right? But the only risk here is that quick commerce companies should not become complacent in terms of lead times, because the only mode that they have today is that 10 to 20-minute window in terms of delivery. If you look at delivery lead times of 30 minutes and above, that is something which everyone else is doing. So you have the likes of Myntra, Amazon, Flipkart, and some other platforms like Nykaa. So they're offering delivery 30 minutes to 1 hour. The proposition here is delivering the product before 30 minutes or other 20 minutes. That is something needs to be maintained. Now, the regulation does not ban 10-minute delivery, right? You can have a delivery within 5 minutes as well, 15 minutes as well. There's no ban in terms of not having 10-minute delivery here. And in terms of preference, lastly, we actually believe that this will help, better players actually emerge bigger in the ecosystem, because their consumer experience can improve further from here on. And if other players actually become complacent, that can have a negative impact in terms of consumer experience and their potential market share.
Sure. I think if 10 minutes becomes 12 minutes or 15 minutes, it's not like people are going to stop, ordering. I think their problems are bigger about how to find profits and how to stop burning cash. But Karan, thank you. Thank you so much for joining us. Always a pleasure having you on.